Welcome to The Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend Podcast. Today is Friday, August 14th, 2026. S&P 500 currently sitting at 77.95. I'm David Zarling. I'm here with Ian McMillan. Trying something new here. It's going to be an Easter egg. We're not announcing it, but a little more stress on this podcast this week.
Got to be aware of everything.
Yes.
I can't pick my nose. I can't pick my nose.
Yeah. You
Can't
pick your friends.
Can't be on my phone.
Can't pick up your phone, can't look at your phone. New rules. Got to be aware of what you're wearing.
Yeah. Think about that on a Friday.
Yeah. Facial reactions. I just keep a still face.
If I toot, I got to keep a...
You can still do that. No problem, man. All right.
It's natural.
S&P.
S&P, we're sticking above the range. We have follow through. Well, we had follow through. We got stuck in the range for a little bit. I would say like August, like last Thursday through Wednesday, last Tuesday through Wednesday. Stuck in the range, popped out now.
Yeah, I mean, quality consolidation. You know, when you look at, I don't have it on the screen, but if you look at Bollinger Bands, they were compressed. The break higher last week actually exceeded the Bollinger Bands, which Mr. Bollinger would tell you is a very quality setup. So we'll see if it's got staying power, but Eco-Weight S&P doing the same thing.
Yeah, how about that?
And if we look at RSP versus S&P, trying to hold a 200-day.
Trying.
I mean, it's still...
we'll see.
It's got work to do.
A little divergey on the RSI.
It's got some history down here. So...
Think your average stock can do it? What about equal weight NASDAQ versus NASDAQ?
Let's do it. I like it. Above a 200-day. I mean, change in rate of trend.
See, yeah, I mean...
But it's got, I mean, that's a pretty big draw. What are we talking about? 4 years? 4 years and...
So it outperformed during the bear market, 2022.
Minus 40%. And I really, when we talk about eco-weight versus cap-weighted, aren't we just comparing momentum versus not momentum? Like a cap-weighted index is going to be more momentum than an eco-weight. Now, there are times where it can outperform. Eco-weight can outperform. And I do think it's interesting that we have eco-weight Qs breaking above QQQ. I think that's a good...
Got to new highs. NASDAQ 100, not new highs. Russell...
Yeah.
Did make it to new highs. I had that wrong in my notes, but Russell we got there. Broke above the, what was that, like early July. Popped through on Wednesday. So you need to see that hold.
Yeah, and when you look at small caps year to date, I mean, it's small cap semiconductors. Makes sense. Telecom, electronics, marine transportation.
Yeah. Transportation.
Yeah.
Is a winner year to date.
Marine transportation.
Oh, marine. Yeah.
Right. So maybe if we look at
global shipping.
Boat looks pretty doggone good.
Look at that. Yeah.
Sea and cargo. New highs here. These are a little trickier. Be wet and be dry. But tanker shipping. I don't know that stuff.
Yeah, that's more much. That's a little much for me.
Yeah, those are contracts. So a little harder. K1s. If you're into K1s, go for it.
I am. Really. Actually.
You are? You like K1s?
I collect them. I think they'll be worth a lot one day.
Yeah, Justin.
If I hang on to them.
Justin loves them.
Hey, you want to see my K1s from like the early 90s? They go for a lot on eBay.
You hang them on the wall?
Hang them on a lot of people get them framed. Yeah.
I mean, look at this. Look at bulk
You can buy that with it's a weekly, yeah.
tanker shipping versus S&P. How about tanker shipping versus SSO? I mean, it's been marine. It's good.
So we need to be involved in the marine transports and not I shouldn't be waiting for semiconductors to
Well, let's just look at
grow a pair.
transportation. Okay, transportation not at new weekly highs yet. But I mean, how long were we waiting it to break out of this range from May of 21 through July of 25? Pretty long time.
Not a new highs. Disappointment though. Bad relative chart.
Yeah, I might be doing this wrong, but what if I subtract out Uber and compare it to the S&P? Doesn't want to do it? On TradingView. I don't know. Thought I could do that. Oh, there you go.
There you go.
Yeah, I think if you subtract out Uber, I mean, Uber is the dog of transportation. And it is the, I believe, largest or second largest. It's the second largest. It's 15% of IYT. On the flip side, Union Pacific, largest holding at 17%. That's a pretty big.
That's a nice chart. Oh, well, yeah, the railroads look. I know like a couple months ago, who merged?
What do you mean?
Canadian Pacific and.
It's a little cup and handle-ish if I ever saw it. Is the largest piece of
Kansas City.
Kansas City.
That was it. Kansas City Southern.
I don't know why TradingView is being sold for me right now. I'm trying to do Union Pacific versus IYT. Nothing. There we go. I mean, false breakdown.
Or a false breakout. Shorter term. We'll see.
What else? What else are you seeing out there?
Bitcoin still below the anchored VWAP. I think it's down to like 62 now.
All right, sure. Show me what you're looking at.
Let's see, and then you put me on the spot. I gotta get stuff ready, and then I gotta go find these anchored VWAPs, and now my microphone's in my way. There's a lot of learning happening today.
There is. Yeah, now I see
Look
you.
at that.
Bitcoin VWAP from the 2022. It's good.
Is that what I want? You know, they don't.
I think you can see Bitcoin as well.
Still below 200 day.
Yeah, the 2022 low. That's not really a great look.
Might have to. It's not, but it's been hanging out here. We'll see. We'll see. We've been hanging out here for a month. Both sides of the VWAP.
And the dollar below 100, and it's doing that. It's that weak. See, this is the other hard part about doing this is you get to show some of your dirty charts.
Look at that. I know. Dude, these are disgusting. I don't want people to see me like this.
I know.
I feel naked. I feel nude. Don't.
You pull
some
up
of my charts look.
Yes, some of your charts are not clean. A little bit problematic.
These are not necessarily public.
What is going on in your chart room?
What do you mean?
Now that's pretty clean.
Yeah, there you go. There's a dollar. I guess as long as below that line, it's going down. We zoom in. We got a little flag here.
We got the dollar below 100. It's interesting.
Flat 200 day though. So I mean,
you're just saying
this is probably going to be dumb. This is going to be dumb for a while. Like I don't know if we're going straight to 95, 96. We could.
Well, even if we did, that just brings back rate of change, right? Is it really? I think rate of change matters when it comes to currency and rates. And if you stay in a range between 96 and 100 for a long period of time, that might be great for the market. I mean, dollar's weak, but Bitcoin's weak too. I don't know, man.
Yeah, I agree. I mean, I think it's more like currency shocks that, or like really strong trends in a direction that can, like weird, the people that matters to, the fundamental Forex, like, oh, I'm buying Apple in yen, and then I'm selling it in Colombian pesos. That's how I make my alpha. And there's people out there that I assume there's people out there that do that, right? There's got to be. Oh, yeah. There's got to be some arbitrage. But yeah, I mean, if you could get the dollar to just sit put in a 3 to 4% range for a couple of years,
not bad. I
think everyone in all, asset classes would sign up for that.
Well, and then, I mean, how long have we seen 30-year rates? I mean, we're talking about almost 3 years of 30-year rates moving sideways, and we're getting a breakout now?
Shocking. I'm going to send this to my mortgage broker who tried to convince me to get an adjustable rate mortgage last year.
Yeah. This is why
'Cause
you
that's all
don't.
these people have ever known, is that, like, it worked. It works. You could always tell people, oh, well, rates will come back. Rates will come back down. So people made an entire career being able to tell people, well, rates are up now. Refinance in 6 to 24 months. You'll be able to refinance. No?
Well, look at, I
Sorry.
mean, again, you know, I know you've mentioned this on X at the Chart Life, that we've been talking for a while about the new cycle
Years.
in rates,
I mean, we've been talking about it since it broke that downtrend.
right? And this downtrend, right? We're talking about 1980 to 2020 being the bottom, 22. So
Yeah.
that's a 42-year cycle in rates, which is perfectly normal. That rates work in 35 to 4-year cycles. So is it really surprising? It's not. We're just repeating ourselves. And so would we be surprised if this based on consolidation moved another 20%? We're at 6.2 30-year rates, 6.2%. Probably not surprised by that. Which brings up which comes first, the chicken or the egg, the Fed or the bond market, or I should say the bond market or the Fed. I would say the Fed is the egg. I think the chicken comes before the egg.
You think the chicken comes before the egg?
Oh yeah,
Yeah, in theory. I mean, God made the chicken.
correct. He didn't
God
make
didn't
Adam.
make an
He didn't
egg.
make Adam as a baby. Like, let me make a baby. No, he
Let me
said
make a little fetus and I'll lay it in this garden.
no. He
Hope
made
you
a man
survive, bud.
in age. This is why it's so, you know,
I'm gonna
it's-
make a
people get really confused about
girl baby and a boy baby,
No.
and then say, okay, yeah, hope you figure it out.
Yep. So chicken before the egg. Probably chicken and egg at the same time, really. Probably definitely chicken. So I think it's bond market before Fed. So it'll be interesting to see if rates get raised because of this move. Now maybe this is a false breakout. Maybe this move above 5.15 is a false move. I mean, we haven't gotten overbought on RSI yet. Could be open to that.
Yeah, but you wouldn't know for like months. This is definitely a thing you gotta watch, like probably on a minimum a weekly chart, if not monthly. Like you wouldn't know. I guess rates could roll over. And as it go with historical cycles, you can give, I mean, I could probably give you some real world political stuff too. We don't need to get into that. But however, Matt, whatever the reasoning is.
This leads me to this
So it
chart.
is.
This chart.
Yeah, so you want to be involved in international. So what's that saying? They're just not going to rate. Are they going to lower their rates, or are they just not raising them as quickly?
Right.
Thought I saw someone said rates around the world are going up, but yeah, I mean I could see foreign rates going up slower. I don't look at foreign interest rates too much.
Yeah, I mean Japanese bonds can be fun to look
How
at.
often are you pulling up? When it's the end of the day and you're trying to decide if you should own more DRAM, are you pulling up?
Well, Emily asked me each night, what's the Japanese 10? So we got to look it up together.
I just feel if my wife did that, I feel like after 4 nights, I'd be like, you can start looking it up.
You could do it yourself.
If you're so interested in this.
Speaking of DRAM,
is that weekly? Yeah.
Yeah, got some memory here. Got Dell.
I know Dell. I do like the Dell.
Nice consolidation. Let's
held
look
up
at it relative.
super well.
Got to look at it on a relative. Matches. Hewlett
Packard's a nice one.
Trying to
probably the best. You think that's the best chart in the ETF? Viavi is pretty good.
Viavi,
but Hewlett Packard, intermediate to long term, I think Hewlett Packard could be nice. I think it could be a nice winner. I don't know if it's going to be like MP status. Speaking of MP, whatever happened to that thing?
MP. Well, and I think,
I thought Viavi was at new highs.
No, it's off a 200-day. Great base breakout, though.
No, what am I thinking of? FTI's at new highs. That's
Technoflip.
a nice. Oh, no. What am I thinking of?
FTI is at new highs. Look at that. Looks great.
I guess I'm making that up. Cybersecurity down a little bit today. It's interesting. That's definitely been a leader.
Yeah. I mean, you look at whether you're looking at Sky, Cloud, I would say cybersecurity too.
Cybersecurity, definitely a big winner. The hacks.
Hack. I don't know why this is being so slow for me. Come on. Yeah. Not bad. Not bad. You know, you bring up some of these ETF stocks. Probably should highlight the support of this podcast, the Adaptive Select ETF listed on the New York Stock Exchange under ticker ADPV, which helps investors access two of the most prevalent factors in markets, momentum and relative strength. Through proprietary identification methods, the Adaptive Select ETF attempts to own the strongest 25 large cap stocks when the market is in an uptrend. And since not all market environments are the same, Adaptive Select seeks to prevent extended declines by moving to short-term treasury bills and cash during long-term market downtrends. Investors can find out more, including how to invest in ADPV, by visiting adpvetf.com or calling 1-833-880-5200. Investing involves risk, including possible loss of principal. ADPV is distributed by Quasar Distributors, LLC. Now, I don't know. Again, we're trying to try something new here. I don't know where you went.
I'm here. I can see you.
I can't see you. And it's every time I stop sharing. I don't know if that's that layering thing Kevin was talking about, but we're going to learn.
We're going to learn. This is how you get better.
It is.
You don't want to be good right away.
No.
That would give us a false sense
Of confidence.
of confidence.
Yeah. Agreed. But yeah, I mean,
Dave and I have lots of space. If you're looking for product placement up here, maybe a little up here, you can see Dave. Any product. Minor League Baseball team.
Major League Baseball team.
Major League Baseball teams. We could be your official podcast. I mean, even like the local Mexican restaurant or chain.
Atlanta Braves playing really well.
We are back to playing well. As long as Chris Sale can pitch all
the games,
5 to 7 games of during a playoff. If you have a game, a 5-day rain delay, let Chris Sale pitch again. Another 5-day rain delay, let Chris Sale pitch again.
I mean, took 2 out of 3 from the Mets.
Yeah.
Swept the Marlins.
Do I like the Mets now, since at least they haven't sold out to private equity?
Oh, I mean, they are the originators of the Bobby Bonilla contract. I mean, that's probably different.
They're still owned by Stevie. I mean, it's kind of. I mean, not.
I mean,
not
4-game sweep against the Nationals. Yankees took 2 out of 3.
Have you watched any preseason football yet?
You know, last night we were in the backyard doing some soccer stuff with the kids. Got inside. My daughter's boyfriend came over. He's like, "Hey, can we turn the?" I guess there's a game on.
What's your daughter?
Lydia.
Oh, okay. Well, we'll talk about that later.
Packer-Steeler game was on. Now, Schadenfreude, I kind of enjoyed. I'm in Packer country, but I'm not a Packer fan. I'm a Viking fan.
Yeah.
And NFL teams can sponsor too. But getting their butts whooped by Pittsburgh, I don't know. It was kind of enjoyable.
And Aaron's still on the Steelers, right?
Yeah.
Yeah.
Yep.
Well, I don't know, Dave. What do you think about market breadth? I'm a little...
Oh.
I mean, I guess it's okay.
Yeah, let's...
Days like today, Russell's up.
I think
S&P flat.
I think market breadth is great.
You think it's great? Okay. Those are strong words.
Well, okay, let's go through the homework. RSP equal weight S&P. Now that's not the market. Do all-time highs. Equal EQAL, also new all-time highs. NYA composite, new all-time highs. Russell 2000, new all-time highs. International stocks, VEU, all-time highs. And then let's go ahead and pull up some breadth charts, shall we? Should we do that? I think we should.
Gotta do something. Here's my dashboard. I'm trying to see stock charts, love you, but you gotta stop moving stuff around.
All right, here we go. Common stock only advanced decline line near all-time highs. S&P advanced decline line.
Yeah, NYSE is all-time highs.
Total market daily advanced decline ratio, kind of like that.
What about like a let me see.
We got
NASDAQ.
New highs, new lows, positive histogram. Now it is
So
divergent. I will give them that. NYSE, new highs, new lows, divergent histogram.
I mean, that's fine.
Cumulative. Here, cumulative. NYSE, new highs, new lows.
NASDAQ breadth looks better than the index.
Here's value line, geometric index. So the average performance of the average stock about to go to new highs.
Super average, super basic. These are your
bullish percent
basic
in X's and not in crazy territory. I think breadth looks pretty good.
Okay. You heard it there, folks. Dave is promising you.
Yep, promissory. Very promissory.
Higher highs. You can do that. You're a fiduciary. You can promise stuff. That's what I tell clients. Oh, no. I can say that. You see, I'm a fiduciary.
Yeah, plenty to like.
There is a lot to like.
And then, what do you think about this? What do you think about that? Last 4 weeks from JC Pretz.
So only 34% bulls?
Yeah, no bulls. Neutral or bearish?
Well, I mean, the fact that we're breaking higher out of the consolidation, really, we'll see what happens with futures. They're a little bit more finicky, but yeah, I mean, as long as SPX stays above these, 77.50, 77.70, 777.
Just think, new highs. Isn't that, it's amazing investor sentiment. New highs typically has a bear, like, oh, that's not good, new highs. But that's the very definition of an uptrend. And isn't it fascinating that we got the most recent low in the market back at the end of July was right when all this stuff was coming out about Leopold's situational awareness blow up. Now he's still fun, but he sold his public equity to Citadel, and that marks a bottom.
I think it's not. I mean, now that Ken owns it, he's not gonna let it go down further. That would be stupid.
Yeah.
Like, I own it now. Why would I allow it to keep going down?
So, I mean, breadth looks good. New highs. Could there be more consolidation? I mean, we're still in summer. We're still in a midterm year. For sure. I mean, VIX is about as low as it's been since end of last year. Not bad. What else? What else you seeing out there?
Not a lot. I'm just watching. Kind of in it. Now I'm watching. But
you're in it, meaning you're invested.
I'm invested.
Yeah, invested on behalf of our clients. And I think that, Stan Druckenmiller would say, put all your eggs in one basket and watch it carefully. So you're watching carefully.
When they add prediction markets to Schwab, I think we'll have a little sleeve in there for gambling on political outcomes.
Degeneracy.
Like a 1% sleeve, Dave.
I mean, it's crazy to think about. Did you see that chart on Gen Z?
About how they're replacing their
and wealth plans. 52% of them have redirected on funds.
But what does that mean, a wealth plan? So they're interviewing people in Gen Z. Are these like, oh yeah, I sat down with a CFP, came up with a wealth plan for me. We did some planning.
Yeah, I don't know if it's a wealth plan or like a 401k plan or a IRA
or is it just their plan? Like, it's just their plan for their wealth, but not a, like, hey, an accountant and a financial planner, help me put this together.
Yeah, Eric Balkunas put this out. Gen Z is moving money from stocks to sports betting and wealth plans, 52%.
Well, that's right. And that's why I'm with your theory. I think that's why we're getting 24-hour trading.
Yeah, it's a retail thing, like 24-hour trading.
It's a retail thing.
That's a retail.
They want you buying. They don't want you gambling on NFL on Sundays. They want you XYZ software stock move 12%. Oh my gosh, I better get some before the Monday open. That's what they want you doing.
Mm-hmm. Do you remember the election night 2016?
Yeah.
How many retail do you think would have puked that Tuesday night because of 24-hour trading? How many investors
Man,
do you think would have gone in,
it's a great like
done an
scenario. Yeah.
emotional response, and sold at the very worst time before the best market in the history of the market? I think you get what I don't know. 24-hour trading, that's definitely
Man, is it
different.
just gonna make it easier to fade like everything that happens?
Well, because the big boys are still going to trade at certain times. Maybe there's an era 10 years from now where that's a little more smoothed out, but there likely is still going to be an auction process that's at a certain point a day where the big boys interact. But I'm telling you, Tuesday election night 2016, the amount of retail puking would have been impressive. So it'll be interesting. Who can't have self-control in the overnight markets? It'll be really interesting to watch.
Long-term financial strategy. So that means there are people that they believe that they're going to win consistently over the long term. And it will be part of their wealth creation, wealth generation process.
Yeah, and here's the
Like,
problem. Here's the problem I have. One, it's equating gambling with investing. Two different things. Gambling is a zero-sum game. There's two parties.
Yeah.
There's only so many dollars.
Yeah, it's binary, right?
It's binary.
I guess prediction markets maybe are not that way, but I mean, yeah, like if you're taking the over/under on Packers Bears,
yeah,
either you're winning or you're losing.
Yeah, and it's more zero-sum. One of the confusing things for market participants is some think the market is zero-sum, and that's not true. There's elasticity. There's money printing, whether you like it or not. There's money flowing in and out. Markets are not zero-sum. I would argue prediction markets and betting, gambling is zero-sum. So
Yeah, if I make money on Apple shares, that doesn't mean the guy that I bought them from lost money. He could have made money too.
Do you think people who have this viewpoint are able to delineate between the two? So, for example, I don't know, you're late 20s, early 30s, professional. You've allocated 52% to betting, and you lose 80% of your account to betting. Do you equate that scenario with all investments are bad?
Or it's just like a meme stock. Maybe it's just like a meme stock. Like, part of me thinks that like they don't care. Like, it's a generation that's just really trying to turn $1,000 into $100,000.
YOLOing?
Yeah, it's meme stocks. It's like, oh, you're only like, dude, but you're just 1 7-leg parlay from 50 grand. Like, and it's the same. Like, you're just another GameStop. You're just another, insert ticker here. Like, memes, NFTs, like the
get rich quick, the hair rather than the
get rich quick. I think that comes from, they're definitely a generation right or wrong. It's definitely a generation that has gotten out of college. I mean, they immediately feel screwed given what's going on in the economy, especially if you're a young male. We don't need to get like political like this. I'm telling you, this is just, it's the truth. I'm telling you. But yeah, I think it's part of the like, F it, the only way to make it out is to somehow hit some type of jackpot. That's very hyperbolic. That's not true. Or they also, as a whole, like worse off than every other male generation in their 20s. Yeah, for sure.
Wait, 20-year-olds are worse off than any other 20-year-olds in history?
I think for job prospects, I think a college educated male has a harder time getting a job right out of college than at any time previously.
Do you have data for that? Or you're just anecdotal, like interacting with people? I don't know.
I know it's definitely a fact for, look at all the computer science stuff that's gone on. Kids have, they have like 12% unemployment for an entire major that was supposed to be the cutting edge major.
Yeah.
And I don't think that's an outlier. So yeah, I think it all trickles down to F it. I did what I was supposed to do. None of this paid off. You could say that for a lot of millennials too, have that attitude. Did what I was supposed to do. Didn't really work out. Whether that's due to like inflation or whatever. The only way to possibly get the house, or the only way to, I got to turn $1,000 to $100,000.
So do you think it's like trying to advance what are the typical milestones of young professionals, young workforce individuals, which I mean is, so the average age for buying a house is like mid-30s. That's just the average.
I think
So-
it's got to be even worse than that, maybe.
Yeah, I just
And
saw.
that's to my point. Look at that's insane.
Well, is it though? I mean, if like, for example, my grandparents who are both in heaven, I don't think they got their house till their mid-30s. And I believe it was
I
like
think there is some of that. I think there's definitely
1,500
a
square foot.
misconception.
It wasn't a McMansion.
But look at the data. Then what's the data on the average new home buyer say historically?
Yeah, we'd
Has
have
to have been going up.
Yeah, I don't know. I'd have to look at it. Maybe we'll do that next episode. We'll do some homework and figure this out. But
Average
I think
age of a
using
new
betting as a
home
20-year-old
buyer
to go and try to
time.
buy your first house is a terrible idea. Terrible. Like,
Yeah, so 28 to 31 in the 80s, now roughly 38 to 40 for the average. The average, obviously 2020 has accelerated rapidly. So yes, 28 to 30 was 1980, 1990s. We are now up to 38 to 40 over the last few years. So
I know home prices have gone up. I know that.
they
So
have.
are you saying that you agree with this method? I don't think you are. I think you're just saying that
No, I'm saying this is psychologically why these people, and I assume we're really talking about young men here, right? Like how many young women do you think are gambling as a way of wealth creation, or buying meme stocks and NFTs and things like that, as far as like, this is how I'm going to retire?
Yeah, my interaction with young is my kids and their friends. So we're talking just leaving college, entering the workforce. So I don't have the insight into like, I mean, my nephews are like 25 to 30, but they both are gainfully employed in great jobs. One owns a house, the other one is looking to own a house. I don't know. So I don't have like a tremendous anecdotal insight into late 20s, early 30s.
Yeah, I think based on everything I've read and research, and I mean, I say somewhat anecdotally, we don't need to get into that, but yeah, I think right there that the average home buyer, the age has gone up 10 years is unfortunate.
Don't we think that fluctuates though? Probably. I don't know. I'd have to go find the data. And should housing be an American right? Like, is that how that?
I don't think anyone's making the argument that it should be a right. It just sucks that the average person is now 38 when they buy their first house, when that wasn't the case just 20 years ago.
Yeah.
That's the point. And so what these people are doing, because they still want the American dream, they still want to own a house. Like, I mean, again, I think you and I, and it took me a long time, I think you and I live in a very, very different world and our kids, or your kids and your kids' friends and their parents, it's a very, very different world compared to what the average young male, college-educated male is dealing with.
Yeah, no, I believe that. I mean, I'm totally open-minded. We all live in bubbles. No one gets to sit here and say they have
We do.
firsthand experience in anything. You know,
And it took me, I used to kind of like scoff at the K economy thing, but I don't know, man, there truly are two different economies, and everyone wants to make it to the other side. It's just so.
Well, yeah, isn't the average
It's
home price
harder.
now 400K? It used to be 250.
400K, and these kids, they don't know how to date, so none of them even experience the like combo of double. Like they all suck at dating, but they're like half the secret there is getting married, so you have two incomes. Like it's
Making a family
there's
together.
there's also a lot of things that disservices they're doing to themselves. So I mean that's part of it, right? There's a lot of things that previous generations,
Yeah,
you know,
I had to talk to girls. Like,
yeah, right? Like you got to figure it out. Get married, have kids. I mean, you just figure it out. It doesn't have to be this perfect, like, I need to have $200,000 in the bank so girls will talk to me. That's not,
when I remember
I don't know.
our
We've gotten
first,
super
well,
philosophical
that's okay.
here.
No, this is a good discussion. My first house was a duplex, and we made that decision because the rent from one of the units helped us pay for living in the place. Was it awesome living with another person? No.
Well, yeah, and I think, right, I think that goes back to what I always chalked up as Instagram culture. No one really wants to start off with a starter home, right? So I would chalk that up to a disservice that,
So two things are
you
true at
know,
one time,
I
basically.
think
$400,000 house, people are buying it later. There's not as many good jobs. And then on the flip side, they have all these distractions or
yeah,
misconceived
they
notions.
are done. Like I would say that they're arguably like the least smart with their money. I mean, I would say that's definitely an argument. The wasteful spending of millennial and Gen Z has probably also got to be up there. The consumerism,
Yeah. Saying no. Saying no.
putting
We have a conversation, but
putting vacations on credit cards. Like at 23, when you're only making like 50 grand and you want to put like an $8,000 vacation on a credit card, like that's also dumb stuff. So right then it's hard to be when as a whole when they cry, when they so I shouldn't use the word cry, when they
meant.
lament, I can't afford a house. It's like, well, again, as a whole, I kind of know your generation does some stupid stuff. Like I mean,
Well, and the example in that Eric Balkunas gave in that tweet was a 32-year-old who shifted some to betting, made $2,500 in betting, and then used it for a vacation, which is not investing.
it's not investing.
That's taking from your nest egg that should be
Yeah.
compounding and using it towards something that, and anecdotally, when we went to Punta Cana, where champagne problems, I get it. We had a great vacation. I could not believe the amount of 20-year-olds there. Could not believe it.
Dude,
Group,
they say that like they put these things on those payment apps. What do they call those things?
like short-term loans or I don't know what those,
Yeah.
like Affirm or things like that. Yeah.
Mm-hmm.
No, I like this philosophical discussion. It's both and. I mean, it sucks that homes are, and that's why what's interesting to me is like we're upon the 18 and a half year cycle for real estate. So where do we start to see the cracks and the correction in real estate? And maybe it's
Is
this,
that
right?
real estate moves in 18-year cycles?
Yeah, 18 and a half year
Okay.
cycles for real estate. So we're in that window. So do we get a real estate correction?
So I should sell my house, is what you're saying. I gotta go tell my
No.
wife.
I mean, it's up to you, man. That's your call. Sometimes there's more value than money. It's about where you're raising your kids. So
Oh
you
no,
just let
we're
go.
definitely not. Definitely not.
Well, this is good. We went
Yeah.
through, we got charts, we got philosophical. Anything else you want to
We
cover before we get
fixed
in there?
Gen Z's money issues.
Yeah, we fixed it. Fixed it all.
There you go.
All right. Anything else you want to cover before we kick it?
There's not. Yeah, I mean, as long as we're out of this latest short-term range,
Yeah. Would you just say the new
77, 70.
the new line in the sand is being
Yeah.
above the
And
prior?
really, I mean, I guess the long-term line in the sand is 7,600, right?
Yeah.
We come back down to 7,600 and bounce. It's gonna suck, but still nothing would be broken.
Yeah, same with 7,300. That would be a little bit more painful if we had a.
Okay, well,
It's
I
a,
mean, 73. Yeah, I mean, 73. I think people would
it's a
have
7%
some dirty underwear. I would probably have some dirty underwear at 7,300.
right along with your dirty charts,
Filthy charts.
dirty filthy charts.
Disgusting.
Well, thanks for doing this with me. We're gonna learn as we learn this new method, but we thank everybody for listening and watching, maybe.
And watching, I guess. Yeah.
And we ask you to give us a high ranking on your platform of choice if you like these.
Have a great weekend, everyone.